Hello, my name is Enrique Rodriguez, and this is my CIS 3198 presentation. I will be doing my executive summary on Nike Inc.'s third quarter report. Nike is located in Beaverton, Oregon. Nike is the world's leading designer, marketer, and distributor for authentic athletic footwear, apparel, equipment, and accessories for a wide variety of sports and fitness activities. Wholly owned Nike Inc. subsidiaries includes Converse Inc., which designs, markets, and distributes athletic lifestyle footwear, apparel, and accessories, and Hurley International LLC, which designs, markets, and distributes surf and youth lifestyle footwear, apparel, and accessories. Before we begin, I'm going to give you a quote from CEO of Nike, Mark Parker. Our team delivered strong results in quarter three. We did it with a relentless flow of innovation into our key categories. Given the diversity of our portfolio, we're able to capture big opportunities that drive sustainable, profitable growth. At the same time, we continue to invest in new ways to enhance athletic performance, build strong consumer communities, and improve how we design and manufacture our products. That's how we increase our potential and drive shareholder value. Nike third quarter financial results. Nike Inc. reported financial results for its fiscal 2013 third quarter ended February 28, 2013. For continuing operations, strong demand for Nike Inc. brands propelled double-digit revenue growth on a currency-neutral bias, and diluted earnings per share grew faster than revenue due to gross margin expansion and a lower tax rate and a lower average share count. Third quarter income statement review. Revenues for Nike Inc. increased 9% to $6.2 billion, up 10% on a currency-neutral bias. Excluding the impact of changes in foreign currency, Nike brand revenues rose 10%, with growth in all geographies except Greater China and Japan, and in all key categories except sportswear and action sports. Revenues of other business increased 9% as growth at Converse and Nike Golf more than offset lower revenues at Hurley. Next is gross margin. Gross margin increased 30 basis points to 44.2%. Gross margin benefited from the combination of pricing actions and easing material costs, which more than offset higher labor costs. This benefit was partially offset by higher discounts, particularly in Greater China, as the company continues to work to manage marketplace inventory. Additionally, gross margin was impacted by unfavorable changes in foreign exchange rates and a shift in the mix of companies' revenues to lower margin geographies. Next is selling and administrative expense. Selling and administrative expense grew at the same rate as revenue, up 9% to $1.9 billion. Demand creation expense was $619 million, up 5% from the prior year, driven by sports marketing expense and marketing support for key product initiatives and brand events. Operating overhead expense increased 11% to $1.2 billion due to additional investments made in the wholesale business to support growth initiatives and higher direct-to-consumer costs as a result of higher volume-driven expenses in existing Nike-owned stores and the cost of new stores opened last year. Other expenses was $17 million, comprised primarily of foreign exchange losses for the quarter. The company estimated the year-over-year change in currency-related gains and losses included in other expenses, combined with the impact of change in currency exchange rates on translation of foreign currency denomination profits, decreased pre-tax income by approximately $19 million. Next is the effective tax rate. The effective tax rate was 22.8% compared to 27.7% for the same period last year. The decrease was largely due to the benefit from the U.S. legislative reinstatement of the research and development tax credit, as well as a lower effective tax rate on foreign operations due to the geographic mix of earnings. Next is net income. Net income from continuing operations increased 16% to 662 million. Diluted earnings per share increased 20% to 73 cents, reflecting a 2% decline in the weighted average diluted common shares outstanding. And here is the income statement, which just readdresses all of the topics that I just spoke about, and I'll give you a second to take a look at that. It talks about the gross profit, the revenues, pretty much everything I explained in the last slide. Next is the balance sheet review. The balance sheet review for inventories for Nike Inc. were 3.3 billion, up 4% from February 29, 2012. Nike brand inventories increased 4%. Nike brand wholesale unit inventories increased 7% to support future demand, while the impact of changes in foreign currency exchange rates and changes in product costs drove a 3% point decline in Nike brand inventory growth. Next is cash and short-term investments. Cash and short-term investments were 4 billion, 845 million higher than last year, mainly as a result of higher net income, proceeds from the sale of the Umbro and Kohan business, and continued focus on working capital management. And here's the balance sheet, which speaks on the inventories and the cash and short-term investments. It also shows the assets, the liabilities, and the shareholders' equity for the third quarter. Next is shares repurchased. During the third quarter, Nike Inc. repurchased a total of 4.9 million shares for approximately 253 million as part of their 4-year, 8 billion program approved by the board of directors in September 2012. As of the end of the third quarter, a total of 11.1 million shares were repurchased under this program at a cost of approximately 548 million. Future orders. At the end of the quarter, worldwide future orders for Nike brand athletic footwear and apparel scheduled for delivery for March through July 2013 totaled 9.9 billion, 6% higher than orders reported for the same period last year. Excluding currency changes, reported orders would have increased 7%. And that is my executive summary for Nike Inc. Thank you.